Morning.
Thank you for joining us at a little after 10 Sunday morning. We're talking about financing today. We already have 2 of the 3 people who will be joining us. I wanted to also wish everyone a happy LGBTQ Pride. Today would have been the parade if we had other circumstances. We're also joined by team members Lisa Holler, Ian Mednick, Paul Young, and Tom Barrero. So we're going to start in a minute. The deal is, if you are with us on the Zoom link, you can put questions in the chat. If you're joining us on Facebook, you can put questions on Facebook. So I think we're going to start. We'll have each mortgage broker. First, I should say that all 3 mortgage brokers joining us are people we have worked with for a while who are consistently good, really serve their customers well. When I think protocol is and should be to recommend 3 names. And I couldn't recommend 3 people more highly than the 3 mortgage brokers that are joining us today. Hopefully the 3rd one will be here soon. So I'm going to turn it over to Faisal Farouk from Wells Fargo to start. And Faisal, take it over.
Good morning, everyone. My name is Faisal Farouk. I'm with Wells Fargo Private Mortgage Banking. I actually help clients finance residential properties all throughout the 50 states. We are in a little bit of unique times with the pandemic and social unrest and just a lot of volatility in the market. And hopefully myself, Hang, and ATN can kind of bring value to you guys to let you know what's going on in the market today, how we view the future of real estate and financing, and what each one of our firms does better than other firms and how we handle clients. So just a quick little intro. I'll let Hang take it from here for an introduction, and we'll go from there.
Morning, guys. This is Heng Chen with Citibank. I've been with the bank for a little bit more than 5 years. And of course, Faisal is correct. It's unprecedented is a term that we keep hearing this year. But I think that as long as we stay on top of things, I think that the business is still going to grow for real estate and then for finances. Yeah, go ahead, Faisal.
Yeah, so I want to talk a little bit, this call is obviously about financing mortgages in the current environment. So I'm going to give you a little background, what I've been seeing the last couple of months with coronavirus and the city being shut down in March. A lot of people just pulled back and were scared about job security, how they're going to manage their day-to-day lives. Nobody's been through this, so there's a lot of X factors and question marks that were out there. Business slowed down quite a bit. People were worried about how they're going to survive and how long this was going to happen for. Once we kind of got a handle on things and got settled into our new way of life, temporarily, hopefully, you saw people get back into the market, or either purchasing properties, second homes, primary residences, or refinancing. Rates are actually really good. Market volatility is there. But with that being said, it's key and important to have your ducks in a row with your finances if you are going to look for a property. With the market volatility, with jobless claims reports being at super high numbers, as well as uncertainty of how businesses are going to keep their employees and manage day-to-day operations, there have been some credit pullbacks, right? You got jobless claims, you got folks on forbearance and bereavement for deferment for mortgages. You know, rents aren't being paid because people have lost jobs. All that stuff kind of trickle down and affects all of us in a bigger way. And banks have pulled back on certain guidelines, such as cash out refinances, home equity loans, how much money you may need to put down, what the credit score may be. You know, overall, it's happening everywhere. Some banks are more conservative than others. For Wells Fargo, we are a conservative lender. We have pulled back. So currently at the moment, we're not doing any home equity lines of credit or any cash out refinances. You know, credit scores are pretty good. We're 20% down for a primary residence on a conventional or jumbo loan, still normal. Rates are phenomenal for both purchase and refinances, but you really got to be at the top of your game to get qualified financing nowadays. The banks are scrutinizing a lot more. They're making sure they're looking at your income.
Yeah.
If there is temporary COVID pay reduction, we have to use that income. How long does that go for? All these are going to be factors when you go to finance a property, whether you're purchasing or refinancing. So it's really important to kind of speak to, someone like myself or Hang or ATN to get your ducks in a row and know what reality is and where you stand. And I think that's key because it's going to make everybody's life a lot easier. And, there's pent up demand in our market. Values haven't dropped like everybody thought it was going to. People have been sitting in the silence and kind of get a handle on what's going on. And now you're starting to see people jump back in. We're going to a new phase in New York City where we can start doing, showings with appointments, which is great. I'm sure every real estate agent on Scott's team on here is happy about that because that's business, right? That's getting out there, getting back to the new normal, whatever the new normal is going to be. I know we're not even close there yet, but it's nice to get out. We've done a lot of legwork past couple of months to get ourselves in this position to flatten the curve. And I think we just need to keep on doing our best practices and go from there. I think better days are ahead.
Let me just mention one thing before Hang tells us what's going on at Citi. A lot of people should be aware that, for example, we're putting on a house probably in about a week in Sunset Park. There are tenants in the upstairs apartment. We are basically, the sellers have instructed us that we are not showing the house without seeing a pre-approval from a bank or a mortgage broker.
Yeah.
So more than ever now, you need to speak to a mortgage broker or someone at a reputable bank, obviously, because you're going to need that to see properties. So I think people need to be aware of that. That is the new normal.
I just wanted to jump in real quick, Scott, and kind of even just emphasize that. It's like going into a property like you may have been used to 6 months ago, 5 months ago, where there was 50 people in an open house. There was this kind of energy in the air. If a property was really very popular, that's not going to happen. And we don't know when that return is going to happen. So yeah, speaking to a mortgage professional, getting that pre-approval is going to be paramount to allowing brokers like Scott and the rest of our team to even allow you to come into the property. So I just wanted to kind of emphasize that. So Hang, I'll let you take it away.
Yeah, good morning. Yeah, I'm seeing a lot of the same thing what Faisal was mentioning. So the initial shock was probably in March. The concern at that time was that the banks in general were going to pull back on lending, meaning cut off a lot of the risky type loans. I was concerned that Citibank was going to do the same. Citibank has not. So we still kept a lot of the program that we had before COVID. We still have cash out refinances. We still have home equity lines, actually. So what Citibank has done is that they got rid of the 10% down payment for jumbo loans. We still have the 15% down payment. So that's one of the changes. But in terms of overall programs and product availability, most of what we had before, we still had now. And it seems like we passed that unpredictable phase in roughly in March, in which the bank is kind of like on steady grounds now in terms of what kind of products they can offer. And you're right, Tom, in that the pre-approvals, I'm getting a lot of requests for pre-approvals, especially the past week. And then, of course, this is in anticipation of the opening up phase of the open houses. And you're right, you have to be more prepared now than ever, simply because there's a lot of pent-up demand, right? In terms of where Citibank are compared to the other lenders, is that now that even though we got past some of that unpredictable phase, what's happening, I think, with a lot of lenders in general, is that we're dealing with a lot of refinances, and there's a lot of transactions that still need to cycle through the transaction that kind of get in the way of the purchase transaction in a way. So, which means that the files that we submit with the client has to be almost like really, really nice, really almost, I shouldn't say perfect, but it has to be buttoned up So we can't be sloppy with the work that we have like we can be before, because the file just take that much longer, right? Because when the client gets accepted offer and signs a contract, the term's still going to be very similar: 30 days or 45 days loan contingency, and on or about closing days, 60 days from contract signing, right? So the contract terms usually probably going to stay the same, whereas the bank's processing time is going to take a little longer. So what clients can do in anticipation of that longer processing time, yes, is correct. Speak to us early on in the process and probably start working on the file in anticipation of contract. Because in the past, I think that a lot of times clients can kind of like, even once a client have contract, they can still shop a little bit. They can still use the first week of the contract to kind of decide which lender, compare rates. But the times are a little different now because of the turnaround time from banks in general are taking a little longer. So I suggest that clients would probably start, working with us on a transaction even before they have contract, just to cut down some of the processing time, and also obviously to the better ability to secure a low rate. Faisal, I want to ask you this question: what's going on with your processing time? That's the big topic that's on our end.
Look, it's busy. There's human beings working on this that are all working remotely, just like we all are. So it's been a little bit of a challenge, but our turn times are pretty decent. They're not, refinances are probably taking about, 60 to 90 days from start to finish to close. Purchases obviously take precedent. We're doing purchases. I've had a lot of clients that are looking and that are in contract that are buying. And every single one, it's like, can you close in 30 days? Can you close in 45 days, right? And my answer is very simple. Look, I know my abilities and get this done. And I recommend to clients is get everything up front as much as possible, because the more work we do up front, it's going to be easier when the loan gets approved, right? Doing the bare minimum and throwing it up against the wall, you're still going to need all this stuff. You're not getting away from it. You're just delaying yourself. We've been doing this long enough that we know what underwriting is going to ask for. We know how they view certain things, and we're going to try to get as much up front as possible. And you know what? I have been closing loans in 30 days. I have a client who's buying in Long Island. I think it's like 3 or 4 million purchase price. Family has a huge relationship, and we got it done. And it's not the norm, but we got it done in 22 days from start to finish.
Oh, that's amazing.
And every day I chatted with the client. I was telling him, like, look, I know you're busy, but you got to set aside time to get me all this stuff if you want to see it through. So setting the expectations, I think, is key. I think being upfront about turn times and not, giving expectations and, guidelines that aren't going to happen. Like if you want a deal and it's a refinance and they want to close in 30 days, you're setting the client up and yourself up for failure if you're telling them that, yes, it's going to happen, right? I know there's certain, on refinances at certain banks, it's like 30 to 40 days to even have it looked at by an underwriter before they do anything, right? Management is working with, those banks are working to get up and running. They're hiring more people. They're getting more talent. But you're talking about human beings that work a 9 to 5 or 9 to 7 job every day from home. They have families and kids they have to manage. So you got to be mindful of that. So I try to set the expectations. I'm sure you do, Hang, as well, and so does ATN. I think clients appreciate it if you just set the tone from the get-go and upfront and honest about it. Because don't tell them it's going to take 30 days when it's going to take 60 to 90 days to close a refinance, right? It's just bad move. It's just bad customer service. It doesn't work out ever. People that do that at my company, I just shake my head. This is a referral-based business, right? So you got to take care of your clients, which in turn are going to refer you more people. So, Hang, I totally agree. I think most banks are in the same position. Only banks that are saying they can get it done in in 10 days, 15 days, 20 days, 30 days are people that either don't have business or don't really know what's going on, right? Because they just want to get it in the door and they'll worry about it later. And you can't do that with clients. And I've talked to Scott about this in the past. We're going to find out now more than ever who we want to work with, who we want to associate ourselves from, and our clients are going to know that as well. So it's key to doing it and doing it better than everybody else, or at least try to, right? We're human beings. We may fail, but you got to do it the right way. And I think that overall we're going to be good.
let me pop in for a second because Etienne is with us. And before I have Etienne, we have Etienne say, you know, what's going on at B of A. I want to say one thing, and Tom Barrero and Paul can speak to this. Very important you have a mortgage broker. Don't go to a bank directly. A bank that is not represented on this webinar, Paul, Tom, and I had a really atrocious experience with maybe about 3 or 4 years ago. And it is really important if you're watching, make sure you have someone representing you. It is, and make sure that person is highly recommended. And all three of the people on today are highly recommended. And if you need their information, you can email us at the scottklineteam@compass.com. But I want to, Etienne's been waiting in the wings. So well, good morning and welcome, Etienne.
Everybody, thanks for having me. Good to see you all. I'm not that adept at Zoom yet, so had a little challenge getting on, but glad to be here. Happy Sunday morning. Just to add in, you know, to some of the other points, at Bank of America, we're not seeing so much in terms of delays with underwriting as much as we are with, I guess, to you know, speak about file submission quality. Just to reiterate that that's really an important piece, that you're submitting a really, really tight, clean package to underwriting because they're so overloaded. All the back office, you know, you've got basically everybody uprooted, moving out of their typical offices, working from home, just like everybody else. So we're just trying to be more efficient. And yeah, to the extent that you're looking to make a purchase, get your paperwork in order way in advance, have someone do a pre-approval for you way in advance. All sorts of issues come up. I think Hang and Faisal can speak to that, especially on the credit score side of things, right? Because people understand what their income and assets are, but you don't really have any insight to what your credit profile looks like. And if there's an issue there, it could take time to address. So yeah, getting that, all that, those three main points out of the way and looked at, income, assets, credit score, and credit profile is so important, because when you get through that bit of paperwork and you have an accepted offer, there's really not much more you need to do when you turn an application from pre-approval status to a you know, an actual loan commitment, an approval letter. That being said, just to touch on Bank of America, yeah, we've definitely tightened up guidelines. We've you know, pushed rates up a little bit to stem off some of the volume, just to be able to handle, because we're doing a lot of refinance applications as well. Yeah. There's a lot of volume in the pipeline right now, and there is a focus on purchase transactions. Purchase rates are better than refinance rates. Yeah, it's a challenging time. You know, it's definitely a challenging time. Guidelines, underwriting, things are tightening up. One thing I'll highlight that I think is astonishing to me, I'm very glad that on one program, which I'll touch on just for a minute, as you all know, I love this program. We do up to 95% financing in LMI zones, so low to moderate income zones, for loans up to $765,000. So that is one program that we have not pulled back on from any kind of loan to value perspective. We do have an income restriction on it, but if you're in the market and you're looking at something, say in Brooklyn, or maybe Bed-Stuy, Bushwick, Crown Heights, anything that might fit into a low to moderate income zone, a lot of areas, especially in Brooklyn, fall into that category. We have a great program where we can go up to 95% financing with no mortgage insurance. Rates are in the low to mid 3% range. And again, if the property is in a low to moderate income zone, you are within an income threshold, we'll give a buyer 2 grants totaling $17,500 to help them with their purchase transaction. And that's a program that I don't see Bank of America pulling away from, because they've made a strong commitment to help financing options in underserved communities to help promote and help promote purchase transactions in these areas. So there's some great things still out there for sure. And back to Scott's point, and Scott, sorry if I misheard, but I think you said to use a mortgage broker, but hang.
I think you meant mortgage banker.
Mortgage banker, correct.
Exactly. And when I started in the business 18 years ago, I was a mortgage broker. A mortgage broker has access to many different lenders. I think, Scott, you meant to say use a mortgage banker, go directly to a bank, Wells, B of A, Citi, great options. If there's nothing unusual about your credit profile, you don't, there's no need for a mortgage broker. You're going direct to the bank. You cut out some fees. You probably get a slightly better rate. But if you have an unusual circumstance, there is still need and a place for brokers, because they can still do some unusual things.
If I can interrupt, I think Scott's point was if you're going to be talking to the bank, you should talk to a trusted mortgage banker at the bank, as opposed to calling a 1-800 number, which really can not be a good situation.
Yeah, like a Rocket Mortgage or the money store.
Yeah, or even just calling the 1-800 number for Citibank, Wells Fargo, or B of A.
Right. Do not
much
do
better
that.
to talk to
do not do that.
a trusted loan officer.
Right. Correct.
Well, I think the key here is that the brokers that we have here on the call with us are in the trenches, in the neighborhoods and areas that we have clients that are looking to buy and sell. So, to Paul's point, you call 1-800 bank, you're getting someone potentially in, North Dakota. Not that North Dakota is a bad place, but they don't know what a co-op is. They don't understand the line between where does Bushwick end and where does Bed-Stuy begin. Like these things, to Etienne's point, the LMI zones, they can look that up. You can speak to someone in Ohio for city maybe, and they'll be like, LMI, is that a band?
Correct.
So,
well, if they're in Ohio, they wouldn't even think what's a band.
No, but I think what Etienne was, and the time you touched on this is, market knowledge, local market knowledge, right? Neighborhoods, price points. Like, think about how many times we've all gone through this. I know Hang has, I know ATN has. We get clients and underwriters in other places. They're like, well, how can this property be worth $2 million and needs a gut renovation? Welcome to New York City. Welcome to Brooklyn. Why isn't there like a pool in the backyard? Why is this backyard so small? It's a whole different world, right? So
no parking.
So like people don't get it, and they're like, well, how is this worth? Why are taxes only $6,000, and why they're not $50,000 on this place? And that's where the market knowledge comes in. So, and I've done it for sure. I know Hang's done it. I'm sure ATN's done it. Of just making the underwriters understand that, look, you're in a different market over here. This is how it's done, and having that knowledge is key. Look, rates are going to be rates. Guidelines are going to be guidelines. There's going to be good days and bad days. But I think the three of us have a ton of knowledge in this industry, in our market. I've been doing this, 12, 13 years. ATN's been doing this a long time. So is Hang. So you have a team of 3 people for the Scott Client team that we've proven ourselves. And it's also like we understand it, and we'll tell you, look, there's going to be days that ATN does it better than I could at my bank versus Hang, and vice versa. Like that, you win some, you lose some. But I totally agree. And I was kind of like taken back a little bit, Scott, when you said mortgage broker. I'm like, it's the other way around.
I meant mortgage banker, correct.
No, we knew. But kind of just want to touch on that, what Tom was saying.
So Tom, did you say there's questions from Facebook?
There was, but strangely enough, Etienne hit it right on the head with the LMI.
Yeah, I had a question about LMI.
Okay.
Whether B of A was cutting back on that. Although I was also wondering whether maybe whether anybody thought that that would be expanded given, you know, what we're talking about these days with, you know, racial justice issues and how that relates to housing. You know, this LMI program is really great for stuff like that.
Yeah.
Yeah.
I don't know. I mean, I guess there are arguments that could be made, but.
Yeah. Listen, we started this program just over a year ago, back in March of 2019. And when it started, I was quite frankly astonished, because we have these 2 grants and we also include a lender credit. And, you know, for the last year, because I live in Brooklyn, I do a lot of Brooklyn transactions. I mean, it's an incredible program, and we're holding our breath, hoping that they don't cancel it. But to me, it's an incredible opportunity. It's something specific to B of A. And if, you know, it works out, great. But I don't see them pulling commitment, but who knows? I mean, so much has changed in the last 3 months. It's just hard to say, but it's still available. So we roll with it.
Yeah.
Hang City has something like that too, right?
Yeah, we have the same thing. We have a low and moderate income program. And just to answer your question, the program is not being limited. And right now, there's no talks of expanding it. So we're keeping it the way it is. And to answer Billy's question about whether it functions, the LMI program functions for co-op condos or townhouses, it functions for all property types, as long as it's a primary residence. And what City has is we have a grant. Our grant is $5,000 if you qualify. And our grant is not just for you can qualify with either income or census tract. So even if you make ton load of money, but if the home locates in a census tract, you may still qualify for the grant and still qualify for the program that we mentioned. So, but to answer the post question, the question if the bank's going to expand these kind of guidelines, if that's in general, I think the trend so far, what we've been seeing is to pull back on products, pull back on guidelines rather than expanding. So I think that now that later this half of this year, I think that you might, when you're working with lenders, I think you have to be careful, because sometimes these products can change during the process of a transaction. Right, it might not be backdate, it might not be grandfather. So when you're working with clients, I think that you want to make sure that the loan officer is up to date with the current guidelines. And this is what Faisal is saying, because the local mortgage bankers, a lot of time they might be more in tune with what's going on with the recent guidelines. Yes,
I think that's true.
Just to add to Hang's point on that. One of the important process, and again, every bank is different, and Hang, you bring up a good point. Make sure, if you're a buyer, to ask these questions. You know, is this program protected, and how? Right. So at Bank of America specifically, what we did was anyone who made an application under the program, and you know, I have applicants in the pipeline who made applications months ago. They haven't locked in a rate because they're buying new development, but because they made the application at the time they made the application, they preserved the guidelines at that time. And we would, you know, we most lenders, reputable banks, would not renege on the guidelines at the, you know, assuming they're frozen by an application. But that's a great point Hang brings up, is to check, you know, if I'm using this guideline or this program now, how long is it available for?
Right, I think so. So I think that was, are there any more questions? I think this was really helpful. Here's another question. Tom, you want to ask it?
Yeah, sure. I mean, I just wanted to say, you know, we're talking to 3 lenders here, 3 amazing bankers that we've all done business with. But, you know, and we typically, like Scott mentioned earlier, we will recommend multiple people because, you know, we want to make sure to give people options. You know, but when it comes to getting a pre-approval, it involves a credit pull. We know this. And maybe someone can touch on hard versus soft. I think that would be an interesting, you know, it'd be brief kind of explanation. Like, well, how could that affect someone given our climate where they're getting 2 or maybe, you know, different pre-approvals How can that, given restrictions that the banks may be self-imposing, how can that affect a buyer? And I'll leave that to I'll leave that to anyone to kind of jump in.
I'll jump in first to kind of give a perspective from Wells' side of it. So, credit pulls, soft pull versus a hard pull first. So we all are consumers. We check it on our credit card apps, Credit Karma, Capital One, Chase, etc. And the way those credit scores are great. It gives you an idea of where you stand as far as credit. But when a lender for mortgage pulls credit reports, it's a hard pull. So there's a variance, and expect that score to be lower than where you have it, right? So if you're an 820 per your Capital One app, you might be at 780, 790, right? But you're in top tier anyway, so you want to be mindful of that. That's reality of it. So I always ask clients first, hey, what do you think your credit score is? And once they give me that, and I ask them how they got that score, then I kind of give them an understanding of how it works. Your second part of the question was about credit pulls and how does that affect. You want to be mindful of who's pulling your credit. Have you given them permission to do it, right? 1, 2, 3 times over the course of a pre-approval process, over the course of a couple months, shouldn't really have a negative impact, but there's no perfect science or mathematical calculation to determine that, right?
Yeah.
If you were one of those people that just calls 7 banks in one day and lets everybody pull their credit, well, your score is going to drop and you're at the mercy of the score. That's how whatever bank you pick is going to judge, right? So it's important who you want to work with. First, I suggest having a conversation with the lender and the individual banker. You may like the bank name, but you may not like the banker because you may not either get along with them, you may not click, they may not be as knowledgeable. So it's key to know who you're working with and do you have that comfort level with them? And then pull credit. So I think if in the course of like a month and a half, you had myself, ATN, and Hank pull your credit, did 3 pre-approvals, I don't see your score dropping like crazy.
Right.
But be mindful of how you spend your money too, what your credit card balance are. If your credit card limit is 10,000 and you're above 50% of that limit, that's going to hurt your score. Or if you say I have a credit card I don't use, let me just close it out so I don't have, my credit gets better. That actually may hurt you temporarily. Your score may drop down when you close it out. So you have to be careful of those things. And I think the 3 of us have been doing this long enough that we can kind of give some guidance on that, based solely on our experience, right? And I think that's a big value add. Look, rates are going to be rates, execution is going to be execution, but at the end of the day, did we help you get that property? Were we, mindful of your privacy and your documents? Did we say what we were going to do? Those are the things that sets, I think, the 3 of us apart from a lot of other folks. Rates are going to be rates. We don't control that, right? But we do control getting you into the property. This is the biggest purchase of your life. We will help you see it through.
Okay.
We want to be very careful on credit.
I actually want to, we're sort of a little over time here, so I don't want to cut anyone off, but I think I have to go start an open house by appointment, so I apologize. So I wanted Paul to talk about Wednesday before we leave, and then I'll officially thank all of you. Paul, what's going on Wednesday?
Sure. On Wednesday, we have a pretty interesting webinar coming up. We have a fixer-upper unit on the market in the Seaport. Shep's listing, and a couple of architects are going to do a virtual walkthrough during a webinar with us to talk about renovations. It'd be interesting to see firsthand on this property, but we can also talk about renovations on other types of things. This would be especially for people who are looking at co-ops, co-op fixer-uppers.
Yes, so that's this Wednesday at 5 o'clock, and we're still working on a week from today, where we'll be back Sunday at 10 o'clock in the morning. So all I want to say is thank you, all 3 of you. Again, if you want information about Hang, Fessel, or Etienne, you can email us at the Scott Klein team at compass.com. Hang, Fessel, and Etienne, thank you for all the help you've given us over the years. All 3 of you are awesome. And just everyone have a great Sunday. And to our team, good open houses today. Thank you, everyone. And thank you, Billy.
Real
Good
pleasure.
luck today, guys. Thank you.
Have a good weekend.
Time.
Okay, thank you.
Bye-bye.